Hey traders, Michael from Elite Traders University here. So we're going back to our pound dollar trade, and like I said the other day, I was looking at a strong move up, and so the reason why is that we'd actually broken this key level. So this was the key level here, and as you can see, every time we came up to that level, we rejected from it. Okay, number of times, then we pulled away down, and then we got this huge demand coming in based on the Brexit deal. So really, once we broke this key level of about one spot 37.57, I have been looking for the breakup, and so I bought, as per my previous video on the pullback there. I also bought back in here. I also bought back in here. So on each of these trades, I took profit as well as held on to a longer position. Now, on Thursday, when we made this deeper correction, I actually closed out all of my previous positions. So it came back to zero, and I was still looking to enter long. And the reason for that is often when you break a key level, you do get a pullback to the point of entry of the breakout. But in this video, what I want to show you is when we have a strong trend, to actually keep a focus on the moving average. So this is a 100 period moving average, and as you can see, every time we've trended strongly, the moving average has been respected, and you can find that on any trend. Strong trend, strong push up, and it's respected. Back over here, strong push up, it's respected, and on and on and on. And so I was looking at the price actually weakening around this 200 period moving average, and as you can see, it doesn't have to touch it exactly and pull away, although often it does. You have to have flexibility to allow price to go through it. And the other thing that I was looking at is if we go down to a 15-minute chart, is that we can see we had a bit of a trend line going on here, and so price came down, and so I was long, and these are live trades, so into a number of positions right at the bottom. Okay, and so these are my floating positions. As you can see, this is open from the 12th of February, so I've got a lot of pips on 4 positions, and I also closed a number, so I opened these also at the same area. As you can see, this is the 12th of February at 103. Okay, so those positions were opened. They were actually opened in this region here, and closed at 15.48. So closed right up at the close of the day. Okay, so 250 pips taken out on those 5 positions, and still these are my floating positions, so we're up another over 300 pips as well. So we're looking good for coming to the week, and what that does is that gives us a lot of confidence in our longer term position. And so let's just have a look at the high time frame, because if we're trading with the trend, we've got our pullback into the moving average, and we've now had the trend continuation. So we are expecting that if the dollar continues to weaken, we will be pushing higher. And this is the weekly chart that my analysis is based off. So we have a high here. This is back in 2006, 2007. This is 14 years ago. Then we have second high here, and we extrapolate our trend line out, and notice that we've broken through that trend line. Okay, so the next stop is about 1.43. Okay, and that is this high here. Now we could stop before then. This is the most obvious place. We are going to stop somewhere in this zone from 1.42 to 1.43, and there is nothing that should stop price theoretically until we come up to that point. So because of that, I believe we're going straight up. We've got fresh air. There's no stops in here. There's no congestion that can stop this. Obviously anything can happen, but this is why I'm looking to hold my position from here, because from where we are now up to 1.42 is about 370 pips. Alright, and if we look at a daily chart, it might not take that long to get there. So if we put a line up there, 1.42 at a minimum, some of these big moves down here, these daily moves are 300 pips, 170 pips. So technically we could get there in 3 days, or we could get there in 2 weeks. But this is my first target. Okay, 1.42, and I'm looking to get there. We've broken the trend line, and we've learned to enter the trade based on moving average, which indicates the strength of a trend. Okay, now let's go, and this is a 200 period moving average, and typically the 200 period moving average, if price is above it, you are in an uptrend, and if price is below it, you're technically in a downtrend. So this uptrend had a bit of a pullback, bit of a correction there, and now we're broken up again and we're heading higher. So good start, or good end of the week, and let's look to the coming weeks, and hopefully we get this big move higher.